Hey guys, how's it going? It's your boy Mike from Seattle. I'm back with my tax expert, Evan Kirkpatrick. Evan, go ahead and say hey.
Hi again.
Hey guys, just so you know, the link to Evan's website will actually be down in the description below. So if you're interested in working with him or getting his advice, just follow that website. What I want to talk about now is LLCs. So I have 4 rental properties. I'm under contract and about to close on 2 more here in the next couple of weeks, fingers crossed. And my mentor has been pushing me. Mark, my mentor, who actually is the one who recommended Evan work with me. Mark, my mentor, has been encouraging me to experiment and get ready to use an LLC. So I thought that I would ask Evan, a tax expert, his opinion on an LLC. So Evan, can you tell me how most of your clients use an LLC with their real estate, if they do?
Well, my answer is I'm not a lawyer and I do not give legal advice in the video.
Of course.
No, I mean, that being true, the thing with LLCs and real estate is that they are primarily about asset protection and a degree of anonymity more than they are about tax benefits. And here's why. There's a couple of things. One is that your statutory right to deduct expenses related to a rental property is not incumbent upon it being in some sort of entity vehicle. You don't have to have an LLC or something like that in order to deduct rental expenses. It doesn't allow you statutorily to deduct anything you couldn't before. Some people would probably argue, hey, if you're filing a separate business level tax return, that might have positive implications in terms of like reduced audit risk, just because of different types of return being audited at different rates or something like that. Well, one, CPAs we're somewhat limited on how we're allowed to think about that sort of thing. But also at the end of the day, we're allowed to deduct what we're allowed to deduct. Mm-hmm. We're governed by law. Audit rates are not huge in general. And so, if it comes up where, hey, someone's going to ask some questions about it, all right, we're going to address those questions. We're not, I'm not out here filling tax returns full of nonsense. Mm-hmm. You're going to ask, this is what we deducted and why, and we're going to go for it. But that LLC being there doesn't allow you to deduct anything you couldn't otherwise. What does it allow you to do? It allows you to pay some poor sucker like me more money to file more tax returns. And that's essentially an annuity expense at that point. That's there forever. Once you go down that road, unless you strip all those properties out of that LLC or do something about it. And so we really want to make sure that we're getting value out of doing that before we set up some business entity that we're stuck with forever. Especially the one thing we never ever want to do is we never want real estate in a corporation or something that's taxed as a corporation, because those can cause all sorts of nasty repercussions where, for a myriad of reasons we don't need to get into here. But you don't want your rentals in a corporation. You don't want your rentals in something that's taxed as a corporation. Just don't do it.
Okay.
But LLCs can make sense.
So hold on, let me catch everybody up on this, because see, a lot of the folks who listen to my channel, like me, are blue collar. I'm a cop. I got C's in high school. That's why I'm a police officer. Evan, on the other hand, I imagine went to college and has a nice degree somewhere on that wall in there. So what he said
on
was,
the floor. You could see it in the video.
Oh yeah, there it is down there. Okay, sweet. So yeah, so he needs a blue collar guy like me to tack it up on the wall, and he just did all the years of hard work to actually earn the darn thing. Perfect. So what he said was, look, there's not any difference in whether or not you have an LLC or not an LLC. You get to claim the exact same tax exemptions from a tax perspective on your rental properties, regardless of whether or not you have an LLC. However, there may be one benefit in that possibly there is a greater or lower, it sounded like this was speculative, like maybe some people think that there's a higher chance of them being audited if they have a business tax return versus their personal.
Well, usually it'd be that the business is giving them a lower chance to be audited.
Okay, so people would fear that they may be audited, more likely to be audited if they don't have an LLC, because the government's like, hey, I can pick on this mom and pop landlord, something like that.
Yeah, well, and it's just different departments of the IRS work differently.
Okay.
But a big thing to keep in mind with LLCs is that an LLC that has one owner, or an LLC that has 2 owners that are spouses in a community property state, which Texas is, and I believe Washington is also.
Washington is as well.
So an LLC has 1 owner or 2 owners that are spouses in a community property state where that LLC is community property of those spouses. The LLCs in those situations are known as disregarded entities by default. in the IRS classification system. What does that mean? It means that they don't have a tax existence for income tax purposes separate from their owner. Or a more succinct way of putting it is they don't exist.
So there's like almost no benefit from a tax perspective at all with an LLC if you're in a community property state.
You can elect to have it be regarded if you want, particularly with the husband and wife. The husband and wife can elect for it to be treated as a partnership for tax purposes. But in general, again, why would you want to most of the time? Because you're going to just create more income tax returns. Partnerships have to report balance sheets. Once they have $1 million of assets in a tax law partnership, it has to report a balance sheet every year. You know, it has to reconcile out all of its assets and all of its liabilities on an annual basis. If you're running a normal business that pays a bookkeeper anyway, that's really not that big a deal. It's something you kind of need to do anyway. Most, mom and pop kind of real estate investors don't have formal accounting records. It's spreadsheet driven, it's STESA, it's management company statements. And my experience with this is trying to layer in a balance sheet on that stuff is an enormous pain because, we don't have any records for all of this stuff. How much cash does the LLC have? I mean, here's a bank statement.
Right.
What do we do with all these transactions this year? I don't know. What if I spent money on these properties that wasn't out of the LLC account?
Yeah.
You invite all of these hassles that are just, they're not worth paying someone like me to do it. And in general, I don't like charging people for things that they don't need to do.
Right. Because like you said, obviously you have a fee to file someone's personal taxes, and then you have fees associated with filing business taxes. And if the LLC doesn't do anything from a tax perspective, you're charging them 2 fees when they didn't even need to do that whole second thing. And potentially creating a whole bunch of extra work for yourself that's unnecessary because it doesn't actually change anything.
Yeah, and it's not, at the end of the day, you're not going to create, under most circumstances, enough of a benefit to make it worth it. If you're in some idiosyncratic situation where we'll definitely say, hey, this is one where you should put this in something. Or if you've got a real world reason where it makes more sense to do it like that for some specific reason, these things come up. And so we don't want to have hard and fast rules when we're dealing with tax planning. It's all circumstantial. It's all contextual. But in general, if you want to have an LLC, there are very good legal reasons to do it, related to liability shielding or getting your name off of different county tax records and stuff like that.
Right.
There are great reasons to do it. And the joy of LLCs is that you can do those things. And for tax purposes, we can just pretend like it's not there.
Interesting. Well, that's cool. So, yeah. So, really what I'm hearing is there's little to no tax benefits at all to an LLC. Most of the time, it sounds like all of the time, you're going to be able to take advantage of the exact same benefits, whether or not you have one. However, from a legal aspect and limiting liability from tenants coming after you or coming after all of your properties, that's where the true benefit of LLCs come in. But
that's right.
If I'm doing business with you, we're just going to pretend like the LLC doesn't even exist anyway, so I only have to file my personal income tax.
That's absolutely right. But I must say, anytime we're dealing with these things, there's one thing to keep in mind, and this will come up a lot, and it's somewhat me protecting myself, but it's also like, hey, different people do different things.
Evan is not a lawyer. This is his opinion in a hypothetical situation and in a hypothetical world. He is not going to be held liable, and neither am I. I don't give financial advice. I just give bad opinions. Okay, so then the other questions I would have. So you've been doing taxes for a long time, and you've worked with my mentor. You also worked with, I think, my friend Caleb as well. Yeah, Caleb.
That's right. Yeah.
Who's been on my channel. Mark knows. How many of the folks, or do you have a rough idea of, out of all your real estate clients, 25% of them have LLCs, the 75% of them just self-managed? Can you give us any rough idea of numbers like that?
I can't give you a good number off the top of my head. Part of it is that we've worked with 1 or 2 lawyers who have been referral sources to us. And so by doing so, obviously we get more that have LLCs because, they're setting up the LLCs. But with the mom and pop types, it's definitely a mix. We've got some older people that are just like, no, I'm not doing that. Like they've just done the same thing for forever. There are different ways to manage liability risk, where some people are more from coming at it more from an insurance perspective, and definitely for landlords, umbrella policies are definitely something to heavily consider.
Right.
In my opinion. There are definitely people that come from the screw it school of just come get me, bro. You know,
Yeah.
And it really kind of depends on what things keep you up at night in a lot of ways. And paying money to avoid stress is definitely important too. It also depends on just how much money, what's your net worth look like? You know, what are you trying to protect from? What sorts of situations are you in? You know, but there are a number of people, there are people that use LLCs. There are people that use series LLCs in states where that's more set up. There are people that, in general, what you don't see is you don't see like one LLC per property. That's generally considered to be pretty overkill. Outside of a series context.
I hear a lot of people who talk about that. Should I get an LLC for every property? Should I get an LLC for every 3 properties? I know Mark does the children series LLC, so they can all use like the same bank account. It's all in a trust, and then he has a different children series LLC for each property. But that's another topic for another video. Maybe I'll ask a lawyer that question. Since Evan
that is definitely
isn't.
into the lawyer territory. And there can be things, you know, when you get into some of that sort of stuff, you, especially when you've got husband and wife co-contributors and non-community property states, you could be in situations where technically you would create a bunch of partnerships for income tax purposes, and you would get yourself into some of these situations that are just not super fun.
Okay. Well, I appreciate, Evan, you taking the time to talk to us about how LLCs affect or don't affect your taxes, because I know that's a question that a lot of people have asked me and messaged me and that I see on forums. So what I want to do for our next video, this year you filed my taxes for me for the first time, and it was a fantastic experience. So we're going to talk a little more specifically about my taxes. So stay with me for the next video. Thanks, guys. I appreciate it.